Hi there Gary, how are you?
I'm well, how are you?
Fine, I was just reading the paper. Can you believe the US debt is over $15 trillion?
It certainly is a big number.
It's more than a big number. If we aren't careful we are going to run out of money.
That's not possible. The US can't just run out of money.
What do you mean? Look at the crisis in Greece recently or at Argentina in 2001.
Unlike Greece or Argentina, the United States is a monetary sovereign government. Monetary sovereigns cannot run out of money.
What is a monetary sovereign?
A government that spends using its own floating and non-convertible currency.
Wait. What does that mean?
Basically a government that spends by printing money, and doesn't make any promises that the money can be exchanged for a set amount of anything else.
What did you mean its own currency?
It has to be a currency unique to the government. If I started my own country Garistan, we would be monetary sovereign if we only spent by using our currency, the Gari. But if we used dollars, or euros, then we wouldn't be sovereign.
What does a floating currency mean?
The country doesn't promise to maintain specific exchange rates with other currencies. It just spends the money and lets the market determine its value. If I said a Gari is worth $2, I would lose some of my monetary sovereignty. That is called a fixed, or pegged, exchange rate.
What does a non-convertible currency mean?
You can't promise that your currency can be turned into something else. Countries on the gold standard had convertible currency. If I said that you can exchange 20 Garis for a gold brick, I wouldn't be a sovereign. The dollar used to be convertible into gold domestically and internationally, but over the last 100 years conversion has ended.
Okay, so why can't a monetary sovereign run out of money?
Well, think about it. If you create your own money, and you only buy things with your own money, then you can always make more. Every time the Garistan treasuries dip low, I just use my printer and make another batch. It's the same with the US. If they use dollars to pay for things, and can make their own dollars, they can't run out of money.
Are you saying the US pays for everything by going to the printing press?
Actually, most spending is done by keystrokes on a computer, that add money to electronic accounts. It's like adding points to the scoreboard at a football game. The scorekeeper can't run out of points. They will just add and subtract them as needed.
But that's not how the US Treasury spends its money. The US Treasury collects taxes, and then spends what it collects.
Actually, it almost always spends more than it collects.
That's when we issue bonds.
True, but only because of a self-imposed constraint within the government. Congress decided that the Treasury is not allowed to get credit from the Federal Reserve. This is like saying you and I are not allowed to get a loan from private banks. This self-imposed constraint complicates things. But it still does not change the basic point that governments spend by creating money.
I do not think so. The self-imposed constraint matters a great deal and shows that the US Treasury will go bankrupt if it cannot tax and sell bonds.
Before we tackle this, think about Garistan. Let's say I want to buy food, but I'm out of Garis. I gave them all away. Do I need to ask people who have the first batch of Garis I created to give them back?
No.
Do I need to ask you to lend me some Garis at interest?
No.
No, I don't. I'll just go to my computer and print more Garis. I'm a monetary sovereign and I can't run out.
Yes, but the US Treasury never operated that way.
Actually, early American governments operated exactly in that manner and printed bills as needed. There was no separation between Treasury and central bank, until the Federal Reserve was invented until 1913. The Treasury provided a significant portion of the currency.
Okay, but what about today?
Let's use the Gary's example and let's assume that I forbid myself from using the printer. Instead, my mom is the only one authorized to print Gary's, and to make it like the constraint on the Treasury, let's say my mom is not allowed to give me Gary's directly.
So how will you get food?
I will issue IOUs called bonds which people will buy with Gary's. Then my mum will create Gary's and use them to purchase the IOUs. The constraint has just added a middleman. Instead of printing Garys, I issue IOUs, people buy them, and my mom buys the IOUs from everyone else by printing Garys. It's the same in the US. The Treasury issues bonds, people buy bonds, and the Fed buys the bonds second-hand, by creating money. It does so in order to promote interest rate stability, which is a central goal of the Federal Reserve.
But people are still lending you money. If they didn't want your IOUs, you would go broke.
If people won't buy my IOUs, my mom will. She would break the rules we made up before. She just lets me starve. It is the same with the Federal Reserve and the Treasury. The Federal Reserve was created by Congress so Congress can change the operating procedures as needed. For example, in World War II the government issued more bonds than people would buy, so the Federal Reserve bought the rest. In order to keep Treasury bond rate stable at 2.5%.
What does this mean for the self-imposed constraint?
It means the government can always avoid the constraint. Even when it imposes a constraint, spending still comes from creating money. When people lend to the Treasury, spending is still funded by money creation at the Fed. And because it is a self-imposed constraint, and not a real one, it can always be removed. If these rules become a problem, the government can just change them. There's no reason to stay locked in a burning building, if you put the handcuffs on yourself and have the key.
But if all this is true, then why do governments have debt crises?
Governments who have debt crises run into problems because they are not monetary sovereigns. What debt crisis are you thinking of?
I've read a lot about the crisis in the Eurozone.
The Eurozone countries are good examples of countries who aren't monetary sovereigns. They agreed to use one currency, meaning they aren't each allowed to create their own money.
So why does that matter?
Instead of being able to spend by money creation, they need to go get their money from somewhere else. They are like individual states in the US. They will use taxes, and spend what they collect. But some of these countries, like Greece, wanted to spend more, so they went into debt by selling bonds. But they can't pay the debt from bonds by creating money. People know this, so they won't give Greece more money. So Greece can cut spending and raise taxes, which is harsh on the people, or they can stop paying debt and go broke.
And what makes a monetary sovereign different?
For starters, a monetary sovereign can just create money. And when countries like the US do issue bonds, they can pay it by creating money, the same way they pay for anything.
Could you explain it with an example?
If the Eurozone countries were in the Garistan example, it's like they decided not to print new Garys, and gave their uncle, the European Central Bank, authority to print them. But the ECB is a very strict uncle, and won't print more Garys just because Eurozone countries are going hungry. So the situation gets quite bad. The ECB has relaxed rules to prevent total starvation, but only a little. The uncle still won't print enough to make sure people are fed, so the Eurozone countries continue to go through crises. Not starving completely, but not recovering fully either.
But what about Argentina? They had their own currency and they had a debt crisis.
Argentina had a very strict fixed exchange rate policy, called a currency board. They promised to exchange their currency for a certain number of dollars. Before they could print money, they needed to acquire dollars.
I'm not sure I quite understand.
Think about Garistan. If I create Garys, but I promise they are worth $2 each, I can spend, but someday people may start bringing me Garys and asking for dollars back. Then I'll need to get dollars just like anyone else, or else Garistan is broke.
Okay, I think that makes sense.
There are a lot of ways for a country to lose monetary sovereignty. Hungary, for example, printed its own currency, but took out loans in foreign currency, so they still had to find a way to get other currencies like dollars or euros. This triggered a debt crisis in Hungary. The important thing for a monetary sovereign is to never promise to convert their currency into anything else, and only to pay for spending in their own currency.
But if a government just spends by printing money all the time, it will lead to inflation.
A government can cause inflation by spending too much relative to productive capacities. That occurs regardless of how the government funds itself.
It still seems risky to suggest printing money to pay for things.
But it isn't a suggestion. It's a fact. The US does pay for things by creating money even now. Remember our example. Money creation funds spending already.
So what? Can a government print money and buy whatever it wants?
No. A government can only buy things priced in its currency and available for sale. It's why Garistan is very limited in its spending. Whatever people will exchange for Garis we can buy, but it turns out it's very hard to find construction crews, mansions, and tanks for sale in Garis.
But almost everything is for sale in dollars.
Yes, so that issue is a bigger deal for developing countries than the US. But the US has restrictions as well.
Is inflation the only thing to worry about?
No, governments can also risk monopolizing resources by spending too much. If the Treasury hired every doctor in the country to research a cure for hiccups, we'd be out of doctors to treat sick and injured people. And if the government promised everyone $1 million a year salary, people might not work hard or develop skills, and it will be inflationary. A monetary sovereign government can afford whatever it wants, but it must still spend wisely, and be accountable to its people. The economy and the country can't function unless the government is perceived as credible and legitimate, and so they must be sure that they are.
So overall, can the US keep going into debt?
Yes. There's no sign of inflation now. The US will just need to be very careful about how it spends, like every country always must. But debt on its own won't cause problems, and the US Treasury can never run out of money. Like all monetary sovereigns, it does not face financial constraints. But it does face productive ones. It can always afford to spend, but that doesn't mean that it always should.